I'm Russell Poynton from Edison Group. Once again, it's a great privilege to have Josef Mastragostino, Chief Investor Relations Officer at Tinexta, with us. Hello, Josef.
Hi, Russell, and thank you for having me.
Pleasure, as always. Josef, Tinexta recently released their full year 23 results, which was pretty much in line with your expectations from the start of the year, which is good. So would you mind just giving an overview of what you think were the main highlights of the results, please?
Sure, Russell. The group was able to close another year of great success and great accomplishments. We closed 2023 fiscal year with revenue close to 400 million, 396 to be exact, growing 11% versus prior year. More importantly, I think, is the achievement of EBITDA adjusted, which reached and surpassed for the first time, I would say, in the group's history, 100 million euros. We reached 103 million, growing 9% versus prior year. This growth, I think, is even more importantly because it is 100% organic growth, right? So in a very important year, we were able to reach all of our planned targets. In particular, we had guided the market in terms of revenue. We expected growth to come in anywhere between 11 and 15% versus the prior year. So having achieved 11% puts us bang in line with all planned targets. EBITDA was supposed to come in between 8 and 12% on an adjusted basis, again, versus prior year. And we came in at 9%, again, all organic growth. So I think the results came in very strong. Net profit reached 70 million, which is another great accomplishment. Net profit obviously reflects the 35%, 35 million, I would say, gain in terms of capital gain from the closing of Revaluta, which was closed in March of 23. More importantly, I think it's also important to highlight free cash flow. Adjusted free cash flow came in at 57 million, growing 15% on top of the already strong growth of prior year. So, in terms of overall KPIs, in terms of all overall results, 2023 was a great year. And obviously, this puts us at a very good point when delivering on 2024.
That's great, thank you. And when we looked at the divisions, I think one of the most interesting things for me was the fact that cybersecurity delivered good profits on much lower revenue than we expected. So could you just talk about what happened in that division that drove those revenue, the revenue and then actually the profitability?
Sure. So yeah, let me start definitely with cybersecurity. So let's talk about factual elements. Cybersecurity for 5 consecutive quarters has constantly posted double-digit growth, not just on the top line, but more importantly on the EBITDA. And in fact, we grew in terms of revenue on a 2023 fiscal year basis. We grew 15%, reaching 90 million of revenues, but more importantly, EBITDA grew 45% versus the prior year, and the overall margin grew 350 basis points. To get to your answer, obviously the growth in terms of revenue saw a growth in terms of 15%, but the EBITDA was obviously a greater growth. That is a function of the greater weight that is coming from, in particular, the managed security services side of the business. Remember, our 4 pillars in terms of cybersecurity are advisory, followed by implementation services, followed by product, which we do up to a certain point because we do very little product. And then the 4th pillar is the managed security services side of the business. We can, with great pride say that the cybersecurity side of the business was the one that contributed most, and that grew marginality to that 17%, growing again 350 basis points versus the prior year. So that is also a function of the fact that the company was able to become more and more renowned in the market by closing important contracts with major banking institutions, for example, and therefore, creating value in terms of margin generation, in particular in the managed security side of the business.
Good. And what stood out to me also in the results presentation was there were lots of examples of cross-selling opportunities between the different divisions within the group. So could you just talk about how they're helping each other and how they're helping their clients, please?
Sure. Let me give you, first of all, some numbers, because there's always, it's always good to give out, figures and be factual about things. We started, I would say, accounting for, overall cross-selling revenue in the last couple of years. The group, as you know, has expanded tremendously, in particular in the last, I would say, 18 to 24 months. And if I look at the time horizon of a bit more than 2 years, we were able to generate around 30 million euros of revenue coming from cross synergies. Now, the cross synergies come in particular between the digital trust side of things as well as the cybersecurity side of things. I mean, it's very renowned, the fact that we have developed products and services between these two divisions. One clear example is the secure email. So in digital trust, we sell services such as certified electronic email, but together with the cybersecurity side of the business, we actually created a one-timer in terms of the market. In fact, we are the only ones offering this in the Italian market, which is a cybersecure certified email. In other words, we are not just certifying the sender and the receiver, which is something digital trust already does, but we are also creating a cybersecure space within the email, which accounts for not just the subject, not just the object of the email, but also all of the attachments. So imagine that these cybersecure emails have a very high value of content, and these represent some of the most tangible synergies in terms of products and services. But this obviously goes beyond, right? I mean, business innovation definitely does a lot of consultancy for small, medium enterprises. Remember, the bread and butter of business innovation are small, medium enterprises. But even there, small, medium enterprises may need a lot of the services that digital trust obviously offers. Everything that's pertaining to the digital transformation, even if they, for example, have put together a cybersecure offering, maybe they need some support from the cybersecurity business unit. So, even the business that seems the least synergic, if I may, has a lot that can actually be taken from the other divisions, namely the digital trust side and the cybersecurity business unit itself.
And let's have a look at ABF Group. You started the year by completing the acquisition of ABF, which is Tinexta's largest ever acquisition. So could you just talk about what it brings to the group and how you see it evolving over the next few years, please? Sure.
Just to take a step back, we have been very acquisitive throughout the years. We counted that since 2013, we completed successfully over 30 M&A deals. So starting from that, ABF represents the largest M&A deal ever. In terms of enterprise value, the overall amount reached 155 million. So you're absolutely right. This is the largest that we've ever recorded. And that's also a function of how, Tinexta has grown throughout the years. If I look back 5 or 6 years ago, the average enterprise value of an average M&A deal was probably in the range of 20 to 30 to 40 million max in terms of EV. Now, this average has constantly grown in the past years. And in fact, now we've reached, EVs of north of 100 million. ABF brings, first of all, internationalization on the business unit of business innovation, because it operates in France. It is a very widely dispersed business. What it does is it does subsidized finance very similar to what Warren Top does already in Italy, but they do it in the French market. The French market is a much more stable market when it comes down to subsidized finance, in the sense that this is a tool that is constantly being reiterated every year by the government, regardless of economic, I would say, transitions or ups and downs in the economy. So these tools are constantly being used, and that's why this acquisition has even greater value. In terms of KPIs, we're bringing to the table, if I look at fiscal year expected revenue of ABF on a standalone basis, 30 million of revenue, and a very attractive EBITDA margin, which is 50%, and therefore bringing home 15 million euros of adjusted EBITDA on a standalone basis. So you can understand also I would say, the quality in terms of this business and what it brings to the table. Obviously, we are completing the portfolio. We want to become a pan-European player, and this is happening mostly in two major divisions. One is digital trust, which you all know already. We're active in France, we're active in Spain, we're active in in the UK, and now in BI, we're also active in the same and very similar countries. So we are actually expanding at a pan-European level, and ABF brings to the table competences, know-how, and at the same time, the opportunity to start creating tangible synergies. Because remember, when you are working, just to give you one example, and to keep it short, when you're working on European funding applies to both the French, Italian, and the Spanish market. By us having one center which studies pretty much the same legislative updates, but applies it to 3 different countries at the same time, we are already making tangible improvements in terms of synergies. So stay tuned, because there's a lot to come in that division.
And as is customary, when you release your full year results, you've provided your first-time guidance for the year ahead. And you are looking for a better year in FY24 than even in FY23. So could you just talk about the drivers to the growth in the coming year, please?
Sure. This year we gave another, ambitious, I would say, guidance, but it's also a guidance that has factual backing, in the sense that we provided to the market on a 2024 base revenue guidance between 21 and 23% growth versus the prior year, of which 7% being organic. In terms of EBITDA, I think the growth here is even more importantly, remember, we obviously benefit from operating leverage. The growth on a 2024 base is expected to be anywhere between 28 and 32%, of which 10% is organic. And the so-called leverage ratio, or net financial position, or EBITDA adjusted, is expected to come down at 1.7 to 1.9 times. Obviously, these numbers include the known and announced M&A deals, in particular the ABF deal, which we announced in December of 23 and closed in January of 24. But these numbers obviously are an important element to show the growth path of the business, right? So if I deep dive and look at the different divisions, digital trust will continue to grow on an organic base anywhere between 8 and 10% in revenue, with adjusted EBITDA growing 11 to 13%. Obviously, these numbers do not account for the M&A that has been announced during the year. If I look at that division and include the M&A, the growth is going to be anywhere between 14 and 16% in terms of revenue, and instead, in terms of EBITDA adjusted, the growth will be between 17 and 19%. Cybersecurity, which is all organic, will grow again on a 2024 basis versus the prior year, anywhere between 14 and 16% on revenue, and 21 and 23%, all organic in terms of EBITDA adjusted. And lastly, business innovation will grow 38 to 40%, including M&A, and anywhere between 7 and 9% organic in terms of revenue, while the EBITDA adjusted would be 43 and 45%, obviously including M&A, and the organic growth will be probably between 5 and 7%. So what we're giving here is a great deal of detail, but at the same time, we're giving, you know, an overall view of 24, which in our view is definitely very attractive and shows how marginalities are expected to grow and how we continue to deliver year over year as the equity story evolves.
Joseph, that was a great run through of 2023 results and the year ahead. So thank you very much and wish you the best of luck in meeting that guidance.
Thank you very much.